Hello and good afternoon. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com. I want to welcome you to this first episode of the Fab Five. Really a pleasure to put this new video together for you. What I'm going to be doing is looking at 5 stocks that have broken out recently or maybe have pulled back and are reversing at a key support level. And then I'm going to give you 5 additional stocks as setups, maybe to keep on a watch list, waiting for something to happen, like a breakout or something something kind of like that. So I'm going to start off first with a stock in the internet space. This is a time of the year internet stocks tend to do extremely well. So let's start off taking a look at Spotify, SPOT. So Spotify, first of all, AD line strengthening. That tells us that the stock has been closing in the upper end of most of its daily ranges, telling us that there's a lot of afternoon buying, which is a sign of accumulation by Wall Street. So I love to see the AD line moving up with the price action. Next, the price action itself moving up. Nice little cup. Had a little handle back to the 20-day moving average, and then we got the breakout. This breakout has come on extremely heavy volume, picking up well above the average for 3 consecutive days. The relative strength of Spotify versus its internet peers and its internet peers relative to the S&P 500. Both these relative lines moving higher. This is the definition of a leading stock in a leading industry group, and that's what we want. If we want to beat the S&P 500 over time, we need to be in more stocks that are beating their peers and where their peers are beating the S&P 500. That's the way you beat the S&P 500. So Spotify on any kind of a pullback back in the 280, 290 range, I think would be a great entry. Next up, let's take a look at Newpark Resources. This is in that energy space. This is in the oil equipment and services area. But again, you can see the AD line moving up. I want to first show you this top. See this double top coming down, holding this resistance or holding this support. When we finally broke down, we had one more move to the upside. But the measurement on this from 10, dropped 10.7%. Another 10.7% right here would take us back down to about $6, which is almost exactly where we went down to before we finished the right side of this cup, which was perfect. Now we're coming down, put in the handle, and last week made the breakout. So if you look at relative strength, that's been picking up. And this is a group that was lagging for a long time. Many of the energy areas had been downtrending versus the S&P 500, but this is a volatile group. When they start to lead, they can really make big pushes to the upside. There's a lot of energy stocks that have already made big moves, but with this group starting to show relative strength and with NR, Newpark Resources, just making the breakout, this is certainly one to keep an eye on. Third stock, REVG. So this is REV Group. Another stock, very strong AD line. These are 3 white soldiers. If you're candlestick fans, when you get these 3 hollow candles in a row to the upside, that's a signal of significant accumulation, which the AD line confirms. And you want to see big volume on those moves. That's telling us that there's a lot of accumulation taking place. So yes, the stock's overbought. I'm not suggesting that you just want to, rip right into this thing first thing Monday morning, but it is a stock that if we can get a little bit of a pullback, the recent high was at 21. The rising 20-day moving average comes in just below that level. Maybe we get a pullback. I'd keep an eye on that. Next up, how about Robinhood? HOOD. Again, strong AD line. You can see the stair stepping that this chart is going through. Had the double top, made the breakout, big volume, went up, set another top, kind of went sideways for a bit, gapped up, filled the gap. You can see with this candle coming down, filled that gap, went to another high, and now we've come back down to test the 20-day moving average. Over the past 2 months, since breaking above the 20-day, we have not seen Robinhood close below the 20-day. We were right on it. So this could be a key reversal on Robinhood going into this week. Keep an eye on that. If it does fail to get through, watch the recent low. I would think maybe around 1710, 1715, you might find another area of support. Relative strength is pretty obvious. Now, the group software pulled back for the last couple months relative to the S&P 500. I believe it's simply consolidating for it leads again. So you're starting to see relative strength in this stock relative software. And if software picks up and more money starts rotating into software, stocks that are leaders in the group could see some additional gains. So that's what I'm looking for there. The last one within the breakouts and reversals is another stock I'm looking for a reversal. Bandwidth, BAND, huge move up. I mean, significant. Look at this volume. 3 million shares, the next day, 1.5 million shares. Those were the two biggest volume days of the entire year. And they both coincided with gap ups and strong finishes and a very strong AD line that went to a new high. So what's been happening since then? Well, there's your false breakout on price. We have been coming back down. I see support between about 1650 and maybe 1770 or 1760. We're in that range now. Notice the 50-day moving average also coming up near that 1650 level, and the prior high was at about 1650. So I think bandwidth is in this range where, from a reward to risk standpoint, it's starting to make a lot of sense. Recent highs up over 21, support between 16 and a half, 1760, and we're in that range right now. I like the reward to risk on this one. How about setups going forward? Well, let's start off with Now. ServiceNow, another software stock. AD line looks great. It had a huge run from November through early February. We saw software for the last couple months kind of coming down a bit. And as a result, we have seen this bullish symmetrical triangle setup on Now. It had a good day on Friday. Volume started to pick up. It did go up much more so than the overall market, gaining 3.4%. But can it get the breakout? That's what I'm looking for. Looking for that volume to come in. Ultimately, a breakout above 820. I believe it's going to happen sooner rather than later. And down here on this relative chart versus its software peers, you can see that it had a relative downtrend line in play for the last 2 months. We just broke it on Friday. We'll see if we get some follow through. And again, we've got software, which hasn't been so great for the last couple months, which has resulted in now in that continuation pattern, that symmetrical triangle. It's a bullish pattern. I expect it's going to get that breakout. I would watch to make sure support holds on the relative support holds on software. But I think going into April here, we're about to make another push to the upside. And I believe you're going to see some leadership from Now. Next setup, number 2, Informatica, INFA. Again, looking at this software index. AD line strong. Love the pullback here with the hammer on that 20-day moving average. Now it's moving back up. Hasn't quite made that breakout, so maybe we'll get one more pullback. But I really like the way this chart is setting up. The volume coming off of the 20-day test, picking up again, which is good news for the stock. Great relative strength versus software. So kind of like ServiceNow, if software starts to move, here's one of your leaders, could see even more strength. So keep an eye on INFA. Next up, we've got GKOS. This is Glaukos. This is one that kind of goes against the grain, because if you look down here, medical equipment hasn't really been a very strong group relative to the S&P 500. But GKOS has been very strong, near a 52-week high versus its medical equipment peers. Also, beautiful move up in December and January into early February. Nice cup that we've seen form. Maybe this week we'll get a little pullback down to the moving averages closer to about 90.5. That could be a handle. And then look for a breakout. A breakout would measure probably about another $13 or $14, maybe up to the 110, 111 area. So I do like GKOS. I'm watching, waiting for a handle and possibly that breakout. Here's another, this is a small one. So for those of you who like these small stocks, it closed at $5 last week. Couple things I like. First of all, it's been underperforming for a long time versus software. I believe this is a cloud-based software. I don't remember if this is the one I looked at or not, so you might double check me on that. But you can see a subtle start to turn up here in relative strength. Software, again, these last 2 months hasn't been great. But, and this is a longer chart, by the way. This is going back on a weekly chart the last 5 years. But what I am seeing is that this bottom formed in 2022 during the cyclical bear market. We had a really big pushback up to $6, which you can see on volume was where we failed there. $6, $6. We're sitting at 5. So we got another dollar to the upside possible until 6. But where do we go from there? Do we turn or do we break out? A breakout would be really bullish. So I'm going to keep this one on a watch list. Any kind of a pullback, meanwhile, this is not really a bottoming head and shoulder pattern, because if it is, usually the head is the bottom. In this case, this head right here is above the prior low. But I still think the pattern, even though it's not technically a head and shoulder bottom, when you're going down, you come up, neckline, you go down again, you think a downtrend has begun. In this case, we came back up again. We did not set a lower high. Instead, we have an equal high. Put in a pullback that's very similar over here. Kind of looks like a symmetrical head and shoulder pattern, doesn't it? Left shoulder, right shoulder, head, neckline even. Anyway, we broke above that, and we did see volume come in to confirm it. So we're trapped right now between $4 support, $6 resistance. I like the stock closer to 4. I probably would be selling it closer to 6. But if we can get that breakout above 6 and the volume's there, this is one I certainly could jump back into. Last setup for you. Terex Corp, TEX. Look at the AD line coming off the beginning of the year. Been very strong. This is in the commercial vehicles and trucks area, which has been showing tremendous strength over the last month and really has been going up since the low back at the relative low in late November. But look at the last maybe 3-4 weeks, really strong group. And this stock is just trying to make the breakout. So it used that strength to put in the right side of a cup. Looks like we've got a little handle action out here. Big volume breakout. This would measure from 65 down to 53, which would take us to roughly $77. I like Terex. Anyway, that is it for the Fab 5. I really appreciate you tuning in. If you like it, hit the like button, subscribe to our channel, and leave me some comments. What do you think of these picks? Put some in there that you like for next week. Love to hear it. Anyway, have a great week, everybody, and happy trading.